Hello friends, welcome back to Invest with Ara. Today I'm going to show you a program that I've made on Microsoft Excel. It's a program to analyze a company or a stock based on its fundamental values. It's a simple program wherein fundamental values like the values related to return ratios, efficiency ratios, growth ratios, solvency ratios, cash flow and valuation ratios. We'll be putting values in this Excel sheet and arrive at a decision, rather signal, wherein the program itself tells us whether to invest in that particular stock or to hold on to your investment at this point of time in that particular stock. So the values is totally based on experience, my experience. I am a research analyst, so I've analyzed companies before as well, so based on that values I have actually made this program. So today we'll take a company from the logistics sector, Snowman. The company's name is Snowman Logistics. The industry is logistics and the sector is also logistics. Now to have this value, I'll be using an app known as the Stock Edge. It's a wonderful app. It gets you the fundamental value on your fingertips. So I'll be adding Snowman Logistics. It's already there. It's a free app, so everyone can use it. Now this is Snowman Logistics data. Now in this we have to go for fundamental values, so we'll click on the fundamental tab, and now it shows you about tells you about the company and gives you all the financial values related to the company. So I'll expand a little bit. Okay, so view, I'll go for zoom 82. Okay, now we'll be putting one by one all the values from this Stock Edge app. Now to know about the company, we can have the information here in the show profile. Now it says the company company commenced its business as a trader of frozen marine products, and in 1998 it commenced cold storage operations at 4 locations. So the main business of Snowman Logistics is cold storage operations. Okay, the company's operations can be classified into the following businesses segments: temperature control services and ambient distribution. The distribution services of the company comprises of primary and secondary transportation. A lot of things mentioned here. The product segments it caters to include dairy products, ice cream, poultry and meat, seafoods. So it is a sort of a business of cold storage operations, rather transportations. So it's a cash savvy business. So this was a company profile. Now we'll be putting all the values, whichever are there. Now the market cap is 609.04 crores. So 609.04. I'm sorry, it's 609.04. So it's a micro cap company. Now the EPS is minus 0.05. So because the EPS is minus 0.05, it is giving us an hold signal. Had it been somewhere about 8 or 9, it would have given us a signal for buy, but because it is minus 0.05, so it's a hold signal. Now because EPS is minus, so the current P by E ratio is 0. Here we could see that. Industry P is 27.09. Now because the PE of Snowman Logistics is 0 and industry PE is 27.09, so even if the company gets into positive EPS, it has got a good play of 27 basis points. So for that reason, it has given us a buy signal. Okay. Now the book value of company is 25.49. Price to book value is 1.43. Okay. Dividend yield, the company doesn't give you a dividend, so it is 0. Now had it been some value up to it, it would have given you a buy signal, because dividend is a factor wherein it attracts many investors. So here it is 0, so I've taken that condition, and had it been a value above 0, it would have given you a buy signal. Now face value is 10. Now what I consider is, like, for any company having a face value 10, it's good according to me. So face value 10, it has given us a buy signal, and number of shares subscribed is 16.71 crores. Now coming to return ratios. Now in this fundamental tab, you can see the overview tab, the result tab, and the ratios tab. Now we need to go to the ratios tab, and you can see the return ratios. Okay. Now here the return on equity is minus 0.083. Minus 0.83. Now the return ratio is minus 0.83. That's why it is indicating that it's not good, it's bad. Had it been somewhere about 12, it would have given a good signal, but it is minus 0.083. Now return on capital employed is 1.48, still not good, so it's bad. And return on assets is minus 0.66%. So when we see on the return ratio of the company, we find that the program is providing or giving us a signal to hold on to your investments. Now coming on to efficiency ratios, in the ratio tab itself, here there is a drop down menu. In the drop down menu, we have to click efficiency ratios, and you could get the efficiency ratio here. Now the EBITDA margin is 24.86. Okay, so 24.86 is actually good, and that's why it has given a good signal. Coming to EBIT margin, it is 4.27, not that good, and the PAT margin is minus 1.83%. So it's also not that good. That's where the bad signal. In the efficiency ratio, the important ratios are these three. It itself has given out of 3, it's only showing in one indication as good. Rest of the indications, like the earning per share, is minus 0.21. Now here the EPS is minus 0.21. This is the trailing EPS. That is you could say it as the current EPS, and it's also in negative. That's why it is giving us a bad indication. Asset turnover ratio, it is 0.36. It is also not that good. Days of receivables is 74.81. Had it been 1, had it been 365, it would have given us a bad. But for 74.81, it is giving a good signal. Days of payables is 33.27. It is bad. Had it been more than 90 or 92 days, it would have given a good signal, because if you have to pay your debtors very soon, so you don't end up having more cash. So 33 for a cash savvy business is not that good. And days of inventory, they don't have any inventory, so it is 0. It has actually no value given to that indicator. Now if you could see, the efficiency ratio is also giving us a signal to hold on to your investment and not to invest in this company. Now coming to growth ratios. For growth ratios also, you have to click on growth ratios, and you can see the growth ratios. Now if we see the net sales growth ratio is 2.67%. Now according to the program, it is good. When we go to EBITDA growth percentage, it is 30%. It is showing good. It is in fact impressive that the EBITDA has grown 30%. Now the net profit growth is 27.77%, which is also impressive at around 27.77%. If you could see here, the EBITDA growth previous year was in the negative, and now it has come to positive. So it is actually impressive. Now coming on to the EPS growth rate, it is 27.77. So now after two important ratios, the growth ratio has actually given us a buy signal for the company. Coming on to the solvency ratio, I consider solvency ratio to be the most important aspect in analyzing any company. One should always go for solvency ratios because it is actually the foundation of the company. And if you could consider that if a building has a good foundation, you could have as many floors as you want, but if the foundation is not good, so you will have to restrict yourself to certain level. So that is the same case with the solvency ratio as well. So if you have more debt, then it's not good. So here the total debt to equity is 0.31. So 0.31, it is not good for the company. Why it is not good for the company? You could see here the total debt is 131 crores, whereas the net worth is 425 crores. Second, interest coverage ratio is 0.7 times of the EBIT. Now here you could see the EBIT is 8.3 crores, that is what they have earned before income tax. Earnings before income tax is 8.3 crores, whereas the interest that they are paying is 11.86 crores. So the difference amount is actually being shelled out from the pockets and not from the business. So that is also not good. Now current ratio is 0.91. Now current ratio should always be above 1. So 0.91 is also not good. So according to me, the solvency ratio is not good. So it's the indication here is to hold on to your investment. Going further, we could go for cash flow ratios. Cash flow ratios, we have got two value. The cash flow per share is 2.2, so it is satisfactory. Here it's given as good signal, whereas the free cash flow is minus 0.15. Now considering the business structure, it's a cash savvy business, and when we talk about free cash flow, I mean, if it goes in negative, then it is actually a problem for a cash savvy business. So it has given a bad signal here, but overall signal for cash flow ratio is buy. Now coming to valuation ratio. Now valuation ratio, because P by E is in negative, so it is 0. So P by E ratio is in bad shape. Price to book ratio is 1.75. So it's actually showing good. It is as per criteria that I have put onto the program. So now price to cash flow ratio is 20.33, so it is actually good. EV to EBITDA ratio is 17.96. So now EV to EBITDA ratio is also a little higher, which I think is not good for the company. Market cap to sales ratio is 3.84. Now you could see that valuation ratio has also given us a buy signal. So as per all the 5 fundamental ratios, the stock in entirety is giving us a condition to hold. In fact, it is giving us a signal to hold on to your investment and not to invest in the company at this point of time. If at all any one of you want to have any information related to any stock or company about their fundamentals, they could comment below, and I would post a video with the same program for that particular stock. Hope you have liked this program, and if you have liked this program, kindly like, share and subscribe. Thank you.